So, Netflix has been in the news for multiple reasons, as things are not going well for Netflix. The streaming company is said to have lost more than 200,000 subscribers for the first time in more than a decade, and this is just in its first quarter. The company's shares have dropped more than 64% and are now the worst performing stock of 2022. In this video, we'll talk about what exactly went wrong with Netflix, why their stock crashed the way it did, and how the company expects to deal with the losses. But before we dive in further, make sure to subscribe to this channel. We make videos related to personal finance, stocks, and investing. Back to the topic. So what exactly went wrong with Netflix? Netflix shares fell 35.1% on Wednesday after the streaming giant reported that it lost subscribers in the first quarter. Netflix stock closed at $226.19 per share on Wednesday, marking the company's largest one-day percentage loss ever, and currently it trades at $209, which means it has lost close to 70% of its value from its high of $270. This crash comes after a period of spectacular growth for the company, as well as strong investor demand for the stock. Netflix revealed that in the first quarter of 2022, it lost 200,000 global premium customers. They also revealed that an additional 2 million paid members will be lost in the current quarter. This quarterly report put the company's performance far below expectations, and this is the worst drop in more than a decade. Netflix absorbed its biggest blow since losing 800,000 subscribers in 2011. This was in response to the company's plans to charge separately for its nascent streaming service, which had previously been bundled for free with its standard DVD by mail service. The latest subscriber loss was far higher than a forecast by the management for a conservative gain of 2.5 million subscribers. The news deepens troubles that have been mounting for the streaming service since a wave of sign-ups from a captive audience during the pandemic slowed. A billionaire investor, William Ackman, whose fund bought more than 3 million shares of Netflix in January, said the fund had sold its stake at a loss. Ackman liquidated a $1.1 billion investment in Netflix. Mr. Ackman stated in a letter to investors that Netflix will cut Pershing Square's returns by 4 percentage points. This equates to a loss of about $400 million. Earlier in January, the billionaire investor claimed Netflix had a good valuation, but on Wednesday he stated, "We have lost confidence in our ability to foresee the company's future prospects." The shares shed more than a third of their value, finishing down $122.42 from $226.19. It was the S&P 500's worst performer of the day. Investors had previously expected them to add 2.5 million subscribers in that period, but unfortunately they lost 200,000. It's never a good look to lose subscribers, and this is the first time it's happened to Netflix in the last 10 years. Netflix's market value was slashed by around $55 billion as a result of this loss. The company also revealed that an additional 2 million paid members will be lost in the current quarter. These recent happenings have made investors worried about this new trend of it being harder for Netflix to grow, and that's affecting how well they'll think it's going to do in the future. They are left in a dilemma whether they should buy the stock, hold it, or make a total exit from the counter. Why did Netflix stock crash the way it did? The losses, according to Hastings, were driven by a mix of circumstances. Increased competitiveness, the lifting of pandemic limitations, and many others are among them. The business is up against very tough competition. They used to be the big dog, but now they're up against global giants like Apple, Amazon, Disney, and others who have eaten into its audience. Each of these platforms delivers a specific set of shows and movies that people want to watch, so it is a question of which ones they would rather pay to watch. People tend to go for other options because Netflix is one of the pricier options on the market. The company chose to increase its subscription prices in the United States and Canada at the beginning of the year. They initially offered customers an all-they-could-watch buffet of movies and shows that they could access for a low monthly fee. Regrettably, the cost has increased significantly. Most Netflix members chose to discontinue their subscriptions as a result of this. In January, about 600,000 members in North America terminated their subscriptions owing to the price increase. The difficulty isn't simply keeping up with the competition, it's also improving the quality of their content. Apple TV didn't exist 3 years ago, and it was nominated for an Academy Award for Best Picture last month. They've also lost a lot of content from several major networks across the country. This includes NBC, CBS, AMC, and others, as they have all moved to other streaming sites. Instead of licensing their material through Netflix, media corporations are developing their own streaming services and pushing their content through these sources. During the COVID-19 pandemic lockdown, streaming services became an important part of people's daily lives since they were the main source of entertainment when other leisure activities were shut down. Netflix really benefited from the coronavirus stay-at-home orders. However, people have been spending less time on internet sites in recent months as vaccines have been released and mandates have been relaxed. Password sharing among friends and family contributed to the company's poor projection. According to Netflix, 100 million households share their subscription password with other family and friends, with 30 million in the United States and Canada. This has been one of the most difficult problems that the company has been struggling with over the years. Customers are reported to have disobeyed the rules of service, which clearly prohibit password sharing. Imagine adding 100 million new customers to the existing subscriber base. It would have been a huge accomplishment. Another reason is that Netflix has stopped operating in Russia. Following the outbreak of the conflict in Ukraine, Netflix, like hundreds of other companies throughout the world, chose to cease operations in Russia. The business confessed it lost about 700,000 users after shutting down its Russian operations. So how does Netflix plan to combat the losses? Account sharing is likely to become one of the first issues Netflix will address. Hastings said the company will begin cracking down on customer password sharing, which has allowed numerous homes to utilize a single account to access the service. To put an end to this practice, the company announced it will expand the test it launched last month in Chile, Peru, and Costa Rica, which allows subscribers to add up to 2 people living outside their household to their accounts for a fee, while also making the entire experience safer for everyone involved. So it is certain that measures against sharing passwords will be implemented soon enough, and with the password crackdown, Netflix might be able to squeeze a few more dollars out of some of the primary households. Another option being considered by Netflix to stimulate growth is the development of a lower-cost ad-supporting package. They intend to improve the quality of their programming as well. Most streaming services offer such plans already. The plans to re-accelerate growth by limiting password sharing and implementing an ad model have merit, but their impact may not be felt for another year or two, which is a long time to wait. Hastings said in a Netflix Q1 video interview, "I realise it's upsetting for investors, and it is for sure. But we're all revved up inwardly, and this is our moment to shine. This is when it all counts, and we're laser focused on reaching those goals and regaining our investors' trust." According to him, the most basic solution is for Netflix to go worldwide and have the same content all over the world, so there's no incentive to use a VPN to circumvent international restrictions. After that, they would focus on the more pressing issue of piracy. The fundamental aspect of piracy in part is that users couldn't get the content, and that is very much fixable. The problem is that Netflix will have to convince content providers to get on board with this plan. At the moment, they have no idea what the reason is behind studios' decision to withhold shows and movies from certain markets while allowing them to be shown in others. Offering a lower cost plan could be a good solution, especially given how many individuals decided to stop watching Netflix after the recent price jump. Bringing back free trials may also be beneficial. They're also trying to convince consumers to subscribe by including video games at no additional cost. So that's it for now. Make sure to hit the like button and share this video with your friends and family, and don't forget to subscribe to this channel. Thanks again for watching, and we will see you in the next video.